There have been a whole host of worries as far as the buoyancy, or when you're talking about the kind of bullishness that we've seen as far as the emerging markets are concerned, and this is something that JP Morgan has taken into account. Whole host of worries. You saw worries regarding the bond sell-off, you saw worry regarding the inflation scare, you also saw the worries in terms of the Fed fundraising outlook. And despite all of that, what JP Morgan is saying, JP Morgan tracks the dollar fund flows into the emerging markets very closely. What we've seen is the emerging market fund flow has seen fund inflows for the 25th straight weekly close. Now, when you're talking about this, emerging markets saw the 25th straight weekly inflow. This is a significant time, significant because it is the first time ever that it has happened. This is the biggest ever streak in terms of US dollar inflow flows. Now, what's actually happened is that in the last couple of weeks, the emerging markets have seen dollar flows coming in. Dollar flows are actually continuing for the 25th straight week. However, the pace at which it has happened has actually decelerated or has slowed down marginally. And there have been a couple of reasons for that. However, the growth emerging market fund flows slowed down to $2.7 billion from $3.5 billion in the week earlier. The total emerging market fund flows saw an inflow of $4.5 billion from $5.3 billion in the week gone by. The EMEA actually saw strong inflows and it's actually gone ahead and broken out of a slight decline that it saw in the week gone by. It saw a fund flow of close to $104 million from an outflow of minus 43 or $43 million in the week earlier to that. Latin American region actually saw recorded outflows for the third consecutive week. So while emerging markets, especially in the Asian region, is seeing continued fund flows, Latin America is actually seeing a bit of a reversal in the trend, where you're seeing Latin American companies or Latin American region seeing outflow as far as FI flows are concerned. Third straight session or third straight week of outflows for this particular region. Now, the main reason, as far as we've been mentioning that while FI flows have been quite strong and continued for the 25th straight week, it has slowed down quite considerably, and the main reason for that, according to JP Morgan, is the fact that the decline in total emerging market flows was mainly due to ETFs, where the inflows, while it is still an inflow figure, it has slowed down to $1.7 billion from $3.9 billion. So it's actually more than halved, and that is one of the reasons why you're actually seeing the fund flows trickle down somewhat. Now, the emerging market equity flows on a year-to-date basis is extremely strong at $65.8 billion, clearly indicate that the bull run as far as market is concerned is here to stay, at least for some more time.